Hey, you guys, what is going on? So, welcome to another day on the price charts. So, I want to do like a quick demonstration of what multiple time frame analysis looks like when you are a swing trader. So, for you guys who don't know, my name is Shaquan and I am a Forex educator. And I basically love helping working men and women learn how to swing trade so they can use Forex as an additional stream of income. Not only that, but if you're struggling on the price charts, then this is where you want to be because I love breaking these price charts down in their most simplistic form without using trend lines, without using support and resistance. Not trying to reinvent the wheel here, but making you think for yourself and look at price as it flows for yourself so you don't have any barricades or any barriers that could really hinder you from taking long-term profits, especially when you're working. If you're working a 9 to 5, you don't have time to come to your charts like that. Or if you're a busy mom or a busy dad, you may not have time to focus hours on your price chart. You may only be able to dedicate a few minutes, maybe 15 minutes, maybe 30 minutes. And that's exactly enough time that you need to be able to place quality trades. So let me break it down here for you guys. In this video, we're going to only be using the weekly, daily, 4-hour time frame. And I want you guys to take a lot of notes here as I'm breaking these time frames down for you guys. Now, the purpose of multiple time frame analysis is just as it sounds. You're going to be using multiple time frames and you're going to analyze them until you get to an entering time frame. So in this example, we're going to have two analyzing time frames and then one entering time frame. A lot of times when I get into one-on-one sessions with people, I ask them, what's the time frame you start with? And they'll say monthly. Well, then they get to what time frame they enter on, and then it's somewhere around the 15 to 5 minute time frame. But what's not taught to them or has been taught to them is that that's a huge range to be entering your trade based on a higher time frame. And more than likely, by the time they get down to the lower time frame, they're not using anything they plotted from the higher time frames. That is the issue. Okay. So if you've been having that problem, that is the issue. And the solution is that you have to go back up in time frames to find a good entry and hold the trade. Use what you put on your charts. Okay. So let's go ahead and go over it. I'm on Swiss yen, and this is happening in real time as we speak right now. As a matter of fact, last week I posted on my stories on Instagram about Swiss yen, and asking questions on what do people think of the trend, right? So let's break it down here. As a naked price chart analyzer and trader, I go by technical analysis. This is not fundamentals. I don't care for the fundamentals. I care about what is price doing on this time frame or on the weekly time frame. If I were to ask you what is the trend, what would you say? It's either bearish or bullish. It's either an uptrend or it's a downtrend, right? It's one of those things for you. So I'm going to say it is an uptrend. And how do we know? I'm going to use an arrow because, well, let's use a brush tool here or a highlighter because here we can see that price was at 125.14. If you can't see the numbers, I call them out. And then price made a higher high up here around 127s. What does this mean? This is a higher high. The bulls have control. And obviously, price ends up dropping down. This is not a reversal. This is called a retracement. Don't confuse the two R's. Reversals are trend switchers. Retracements are pullbacks, okay? When you get a higher high, that means the bulls have control. You need price to pull back or retrace down to make a higher low. And this is where we have this here. Now price is pushing back up. This is called trend continuation. So we're continuing the bullish momentum, the bullish movement. Okay. So once we get that, and let's just say that price was back here, because when I did this video, price was over here. So if you wanted to get a really good entry, it would have been from somewhere in this area here. One of the reasons being is because when you're looking at an uptrend on a higher time frame, and it's actually on any time frame, it doesn't really matter. You want price to stay above the last highest low. Okay. And some of you guys have been inboxing me and on here on TradingView and emailing me saying, Shaquan, thank you for your videos. Our charts are more clean. They're more clear. They're clutter free. We can now see because you're not using everything else. You're literally helping us. And I'm so proud of you guys. I'm really glad that these videos are helping you. So let's continue the help. Okay. So Yeah, this is where you would have wanted to enter your first trade. This would have been a long-term position. Here's why. If you just stayed on this time frame and you never went down in time frames, you never moved from this time frame, this would be a good entry. Price comes down, proves it can stay above 122.139. Obviously, with structure, I'm using my estimation zones, and you get a bullish engulfing candle, you can call it a bullish inverted hammer, and you will be in profit right now. Imagine this being the daily time frame or the 4 hour time frame. One thing that I love teaching people is if you wanted to stay on one time frame, you actually could. But let's just say that you don't stay on this time frame. Still keep in mind that price is bullish. So now when we drop down in time frames to the daily time frame, the same information is going on. The only difference is now that you see more candlesticks and more fluctuations that now you have to analyze. For example, the highs from the weekly in that structure never went anywhere. They're going to stay on this time frame as we drop down. Okay. Now what's changing? Remember, I was telling you guys the area you want to enter on would have been somewhere down here. Now you guys can see we had another bullish engulfing candlestick. But look at what is going on now. See, when you're on a higher time frame, let's say the weekly from where we started, you're looking at where price is going long term. When you drop down, you're getting closer to your entry. Okay. So if you drop down to the daily, your question should be, what is price doing now? Or what is price doing this week? And how can I get involved? This is why being a swing trader is very important, because these are swing trader questions. How can I get involved this week? What is price doing? Where is price pushing up? If you guys look here at what price is doing, and this is the question that I asked back on Instagram last week, you can see the dates from last week. I said, hey, do you still think price is in an uptrend or a downtrend? Some people said still uptrend. Some people still said downtrend. When you drop down, the uptrend is still valid. The uptrend from the weekly never went anywhere. We saw that if we zoom back out, scale back out to see more candlesticks, this uptrend is still valid. This higher high hasn't gone anywhere. Okay. What's going on is now you're seeing price in this daily operations on the daily time frame. Think about going to work. You go to work Monday through Friday. You have an open, you have a close. Do your operations change day by day? Do the policies and procedures, does everything change day by day? No, they do not. You're operating the same way on the daily time frame. Now, the bulls and the bears or the buyers and sellers will push price, but that uptrend is still the same. So now what's going on here is you're just watching how price is flowing. So if you look here, you have a higher high, higher low, higher high. That's the same thing we just saw in the weekly time frame. That did not change. Remember, we want price to stay above the last higher low. So if I put a price, I call this price tag tool. It's like a price. What is this tool technically called? It's called a price note tool. I call it price tag. Doesn't it look like a price tag? Like to me, just like poppy collars, whatever, poppy tag. It like a tag to me, right? So that's why I call it a price tag tool. But you guys can see how it's above the higher low, price push down. We have hammers, and this signals that price could be pushing back up to the upside, back to the high. It's and some will question, well, how long should it take? Take the time, take the question of time out and just ask yourself, how long am I willing to sit in this trade until it pushes up to where I want it to go to? Time is irrelevant in the market because none of us controls when price pulls back, when price goes up, how far price can go up, how far price can go down. All you need to do as a swing trader, just understand you're holding the trade for more than 24 hours. And if you don't like that concept, then you want to be a day trader. But if day trading is weighing down on you, then you want to be a swing trader, right? So you have to take the good with the bad. And let's just say you were in this trade. Let's say you entered here on this bullish hammer. This is the 14th. This is last Monday. You will still be in this position. And it's almost back up to the high, which would be your take profit, right? Or you could hold it longer if price can continue to go. But it still doesn't negate from the fact that even this is still the trend continuation up trend. Okay. Sometimes if you look too far to the left, you say, well, Shaquan, this was a downtrend. No, this was a retracement because on the higher time frame, this is a higher high. So this is price pulling back with the hopes of it could get back up to this point. Now, do we know if it'll go back up to this point? None of us do. But when you're forecasting, you're saying, hey, before price moves, this is what I'm observing and analyzing based on the trend of the market. But I'm trading for right now until price gets there to this specific point. Now we could drop down to the 4 hour to see this a little bit better, right? Now if you drop down to the 4 hour, hear me well, you're not looking at the full picture again. You have to agree as you drop down. Weekly is bullish, daily is bullish. Your 4 hour has to be bullish too. And the only area you're going to focus on are these recent two highs and two lows. Because if you focus on anything else, now you're going to throw yourself off. So now when you drop in a time frame, your focus should really be where is price currently and what is price doing at the moment. If you guys look here, this is still the most recent high. But look where price keeps traveling up towards. So if we separate what's going on, look at these fluctuations now in the market. They're continuously creeping up towards this exchange rate, and they're getting higher and higher and higher. And even if price pulls back, if it keeps going higher, then you're going to want to see it come and take out the daily higher high and hopefully reach the weekly higher high. If the Swiss can continue its strength, I'm not gonna say over the yen. What I'll just say is, for the people who live in Japan, they're just basically paying more for the Swiss right now. Okay, and this is what we trade too: the exchange rates. How much does it cost one country to exchange their currency for another in another country, right? And it could say strength as well. Who has the better strength over the other? But this is what we're doing here in this market, okay? And this is how you use multiple time frame analysis. Now, here's why I mentioned earlier in the video not to drop down in too low of a time frame. So I'm going to go back up in time frames. Imagine trading from this area right here in the market. And this is my personal estimation zone where I place my chart, the candlestick I want price to stay above. If I dropped all the way down, I'm just going to use a 30-minute. If I dropped all the way down to a 30-minute time frame to enter this trade, let's go down here. If you are an inexperienced trader when price broke, you will believe that, especially if you're using support and resistance or a trend line or whatever the case may be, you might accidentally sell this thing because you may think that, well, price dropped below it twice, I think it's going to go back down. And now you're going to confuse yourself. Okay. And so this is why it's really important to not drop down in too low of a time frame when you're dealing with higher time frames. You really want to group your time frames together, because also too, keep in mind that if I'm on a higher time frame and you're in a lower time frame, to you this could look like an uptrend and then this looks like a downtrend, and so you continue the sales, right? So you want to group your relevant time frames together. If you're going to trade on something like the 5-minute or the 15-minute, the 30-minute, I'm by a window. If you're going to trade on these time frames, then what you're going to want to do is maybe analyze the 1 and the 4 hour to group with those time frames. If you're in a higher time frame, stick with the 4 hour and the above time frames and use your daily as a bridge. I like to say that the daily is a bridge between the higher time frames and the lower time frames, and you can get a really good scale of your overall trend by sticking to the daily and then going up or then going down. So it really does depend on what you do. And it's just a difference in top down analysis. When you're analyzing for your multiple time frame analysis, you're going to start from your top tier time frame. I just started here on the weekly, and then just drop down to your entering time frame. What is that one time frame you enter on to where you can see price and what it was doing and feel comfortable without too much noise of candlesticks? Once you get this down, you are golden. Okay, so I pray this video helped you. If it did, give it a thumbs up. If you have any questions, make sure you put them down below. And if you liked the video, tell me what you liked about the video in the comment section below. I'll talk to you guys in the next one.